Growing avocado in California can be challenging and risky. Let's look at how Federal Multi-Peril Crop Insurance, or MPCI, can help secure your operations' bottom line. This program is developed and reinsured by the USDA Risk Management Agency. RMA, in turn, approves private insurers to issue policies, adjust claims, and pay losses to the grower. To make it easier for you, there's no differences in coverage or premium between carriers. In California, several specialty fruit and nut crops can be insured for yield losses. Specifically, for avocado, 3 varieties are insurable: Hass, Lamb Hass, and Gem. The policy helps should you suffer crop yield losses due to damage from natural causes such as frost, freeze, hail, excess heat, high winds, insects, or wildlife. The Actual Production History, or APH, crop policy is based on your actual past production history of number 1 and number 2 grade fruit. Cull fruit are not counted. Trees at least 6 years old or which have produced at least 2,000 pounds per acre are insurable. Farmers wishing to buy a policy must do so before the sales closing date of November 30th. The grower can select coverage levels beginning at 50% and up to 75% of their approved historical average production. How does it work? Jessica and her dad farm 10 acres of organic avocados in Fallbrook. With the help of Dominic, their crop insurance professional, they decide to insure 60% of the grove's past yield history. The grove's average past production is 8,000 pounds per acre. Regrettably, the orchard suffers a crop loss due to extreme heat in the summer when the fruit is developing. Jessica notifies Dominic, her agent, within 72 hours of the event happening. The carrier sends their adjuster to inspect the damage. The harvested crop was only 1,000 pounds of fruit per acre. Since their APH was 8,000 pounds per acre, at 60% coverage, that's a guarantee of 4,800 pounds per acre. The 4,800 pound guarantee minus the actual production of 1,000 pounds leaves a deficiency of 3,800 pounds per acre. The RMA obtains statewide crop value data from the California Avocado Commission, and in turn determines the insured value of the crop is $1.30 per pound. 3,800 pounds multiplied by $1.30 per pound multiplied by 10 acres equals a total payable loss of $49,400. This helps Jessica and Bob to cover the fixed costs invested in their crop and keep their family farm going. Federal crop insurance is partially subsidized and backed by the USDA to keep rates affordable. The farmer pays a portion of the premium, the government pays the rest. Your first decision is to find a specialist in crop insurance who understands the program and risks you face in farming and bringing your crop to completion. At Golden Pacific Crop Insurance, our agents have 2 decades of experience in crop insurance and still farm our own crops as well. We know what you face out there with ever-increasing food safety regulations, water costs, and labor issues. We know the crops because we grow them. Give us a call and learn how easy it is to have this important risk management tool working for you. It's much more affordable than you may think. Call us at 559-825-CROP, that's 2767, or by email at dfino@goldenpacificcrop.com.